Imagine using a quantum computer to trade bonds, and getting a 34% improvement in predicting outcomes over classic computers. That's exactly what HSBC just demonstrated with IBM. In this video, we'll break down what quantum-enabled algorithmic trading really means, why it matters, and how HSBC and IBM pulled it off. Let's get into it. HSBC's quantum trading breakthrough. In September 2025, HSBC announced what they believe is the world's first real-world use of quantum-enabled algorithmic trading. Working with IBM, they ran a trial in the European corporate bond market. The result? Up to 34% better predictions for whether a trade would be filled at the quoted price, compared to standard classical algorithms. Algorithmic trading is nothing new, banks use it to price bond requests quickly. But the combination of classical plus quantum computing for this kind of financial optimization is groundbreaking. Why quantum plus classical? So why mix quantum and classical computing? Because quantum computers excel at searching huge solution spaces or finding hidden patterns, things classical computers struggle with. In this HSBC IBM trial, they used quantum to augment classical workflows, helping to detect hidden pricing signals in noisy market data better than classical techniques alone. This isn't just theory. HSBC validated the results using real trading data on multiple IBM quantum machines. How it was tested? They tested requests for quotes in over-the-counter, OTC, bond markets, where trades happen directly between parties, not on public exchanges. The teams used algorithmic models that factor in live market data, risk estimates, probability of execution. By integrating quantum processing, they improved how likely trades would be accepted at quoted prices. IBM's Heron quantum processor was used to support the trial. HSBC and IBM ran the quantum plus classical hybrid approach in parallel to compare against classical-only methods. The results and impact. The headline result: up to 34% improvement in prediction accuracy. That's a major step for financial services. HSBC's head of quantum technologies called it a groundbreaking world first. He said this gives HSBC a competitive edge and demonstrates quantum computing's practical value right now, not in some distant future. An official at IBM added that this work shows how combining domain expertise with cutting-edge algorithms can transform industries as quantum hardware evolves. Challenges and what's next? Of course, this is just an early trial. Quantum computers today are noisy, error-prone, and limited in scale. The challenge is getting meaningful advantage before quantum noise overwhelms gains. Still, HSBC and IBM's hybrid approach is a smart path. Let classic computing handle the heavy lifting, and use quantum where it helps most. In the coming years, we may see quantum used in portfolio optimization, risk modeling, derivatives pricing, fraud detection. As quantum hardware matures, these use cases could expand rapidly. Conclusion: HSBC and IBM have shown us a glimpse of a future where quantum computers solve real business problems, not just lab experiments. Their 34% improvement in bond trading predictions could be a turning point for finance. If you enjoyed this breakdown, hit like, subscribe, and ring the bell for more content about quantum computing, AI, and the tech shaping our future. Also, drop a comment. Which quantum application do you think will come next in banking? Thanks for watching. Until next time, stay futuristic.